Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So, if we get some movement here, some type of implicit agreement in the background that reins in a bit of dollar liquidity out there, we think we could see the euro move from even if it is a correction, just a correction of this move. It's a very playable correction here, from 138 and our target of 133. It's a decent play, we think, on a multi-week basis. That's what we're looking at the euro here. Anything more, and we see this pattern shape it up, we could get back into a major bear market in the euro, obviously. And we just pointed out some things here that are still problems. The whole Germany problem festering in Europe is still there, and just the sovereign default problem is still alive and well. Banks are incredibly exposed in Europe, and Germany creating a deflationary problem really across the continent because of their export policies. British pound, similar pattern to the euro here. Again, if we, sometimes you try and have facts to fit your story, but this moves up in a very good Elliott pattern. 1, 2, 3, 4 correction, 5 rally in here, type of move, and maybe this is just corrective. We're not sure going forward here, but that's why we're a little careful with the British pound. Although we like the prospect of it, falling out of bed on growth expectations. We've seen the test of the trend line rally up nicely today on the GDP news. So if this is and it rallies up and doesn't make a new high and starts to come over, we think it may be a decent short setup on any potential for a dollar correction. So that's what we're looking at on the pound. As I said, a pretty similar pattern, a little bit lagging the euro, but similar. Although, as I said, this is you could look at this as a 5-wave up. A three-wave correction here, and then another 5-wave up. Although this movement is a little bit less than we would expect here, but anyway, there's ways of counting that. So, but we're a little less confident on the pound at the moment. So, if we get no global cooperation in the world, if everything we talked about, some implicit agreement, is total hogwash, which it might be, and the G20 amounted to nothing, as most people say it did, and there's no global cooperation. And the Fed just continues to pump more money in here. We saw a number floated, I think yesterday, by Goldman Sachs, came across Reuters saying that the Fed's going to do $4 trillion in quantitative easing. It sounded like Goldman Sachs needed to get out of a position they were in when they were floating that type of stuff on a Monday. But say Goldman Sachs is right, and or right by half, and it's $2 trillion, then the dollar just continues to go a heck of a lot lower, and it says the dollar is the global deflationary or reflationary tool. Gold continues to soar as the major hiding place, and the dollar goes to all new low and lower. We find it odd that given the past QE1 policy and the fact that the U.S. is stuck where it is, and the monetary easing from the government and the Fed has not worked. This is a policy problem, not a monetary problem. But despite that, it seems to be the only tool available to the Fed, and they are desperate, so we have to be very open to QE2 coming about in a big way. We need to see some real action from China to really change this expectation on QE2 and change the expectation that the Fed is going to continue to use the dollar as a ramrod to force China to do something. We need, as I said, we need to see some real action, and we would see that in terms of letting the Chinese currency appreciate on a steady basis. Watching the reaction of the euro, we think it's the ticket to ride from a short standpoint. We think the euro is way overdone in this move, given what's going on in the background in the global economy. And part of it, again, was because of the money coming in from China that we think they would lose that prop. And the Eurozone in general would love to see their currency fall. They wouldn't mind the euro coming down to par with the U.S. dollar. It would take some pressure off those pig countries because right now with the currency where it is, those countries that have to try and export to create some wealth are getting hammered very, very hard. If the currency would come down, they could take less of this adjustment domestically. So a falling euro makes a lot of sense to us for a lot of reasons. We're watching Japan. They came out again today forcefully this morning and said, they got a lot of money to intervene and they may do it again. And if we see the U.S. start to get like a multi-day correction or even less, the Japanese may come in. They came in before trying to, catch a falling knife and got hit pretty hard. They came in with a major intervention, but didn't follow it up because I think they realized that the trend wasn't close to changing. Right now, if we look at the Japanese yen chart, we could probably count some type of 5-wave down. Well, we could have counted that a while, but if we get a dollar correction, it would embolden, we think, the Bank of Japan to come in and intervene and maybe do something on a sustained level. It's basically called the Rubin rule. You wait till your currency has shown some type of trend change before you come in, intervene in the market. Japan learned that lesson again just a few weeks ago. But they've got a lot of money that they can come in with, a big pool of funds, obviously. And I don't think people should think for a second they won't come in despite all these other concerns about currency manipulation out there. We think they may, and we think they may come in soon if the U.S. dollar starts to bounce. So we like the Japanese buy-in dollar yen here at this level because we know exactly where we're wrong, not far away, but the risk-reward on the high side on the sustained intervention and a multi-week U.S. dollar move, we think dollar yen long, Japanese yen future short from a currency standpoint. You have both pairs you can play with by either puts or calls on ISE, the FX, and it may be a nice one to play for a multi-week move. We want to get long the Asian bloc currencies long term because ultimately they're massively undervalued against the West, and it's because of China. China has kept a lid on all of these things, and because of that, if you look at the purchasing power parity, Big Mac index, those types of things on a longer-term basis, massive undervaluation of these currencies. If you think that the secular trend is the wealth of shift from west to east, these currencies have to ultimately increase in value. And once China takes the lid off of it, the rest of the Asian bloc currencies will move up even faster. So I think this is the type of trade that you'd make, on a low leverage basis and just hold it, kind of holding for a long time and just let these longer term fundamentals play out. No doubt the Asian bloc currencies, if we get some type of dislocation again, based on a trade war, all the emerging market would get hit very, very hard. So you have to have a long-term perspective, I think, with this type of trade and low leverage. Ultimately, the risk bid, as I just talked about, some type of dislocation, some type of problem with China going forward, U.S. stock market hit, U.S. stock market crash, anything like that, the commodity currencies would get absolutely crushed. So if you see something shaping up and you think the U.S. stock market is in trouble and really going to break in a big way, we'd say get short these commodity currencies. They are basically risk asset currencies. So, moving, as I showed you, the Australian dollar tick by tick with the stock market.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.